All right, fantastic. Welcome to the Stock Market Update. Today is Wednesday. It is Wednesday, May 25th?
Yes.
Okay, still live from Germany here, and we have a lot to talk about because yesterday, my gosh, the Nasdaq at its worst point plummeted 3.8%. Well, take a look at this. Investors are super nervous, awaiting the FOMC meeting minutes that will be released today. So we'll talk about this, what it means, and what could happen here. We have more earnings surprises. So we have quite a few companies. So we'll take a look at what happened here today. And then we'll show you the trade that we took yesterday and why we took it and how we are trading these crazy markets. Now, if this is your first time here, hi, I'm Markus Heitkoetter. This is my head coach, Mark Hodge. And together we have more than 47 years of trading experience. And every morning we sift through a mountain of newsletters, websites, and reports. And then we take the most important news and go live right here to share with you what you need to know as you head into your trading day. Now, if this is your first time here and you're watching us, I know it can be a little bit overwhelming, but don't worry. We have a special video just for you that I will link to in the description, and that's a great place to get started. Now, Mark, before we look at these crazy markets, since we are in Germany here, for you, it's the first time in Germany, right?
It is. It is. I'm enjoying it.
Okay,
nice place.
Great. I'm just curious. So what have you experienced? What is the weirdest thing that we are eating here in Germany?
Well, there's a lot of meat, which is good. I like the meat part. But we went to this brew house or
Brewery.
Okay. And there were these kind of gelatinous potatoes. They looked like potatoes, but they had some cornmeal maybe. It was different. It was okay, but I thought I was cutting into it. It was not a U.S. baked potato. Let me tell you that.
Okay. So if you're wondering what he's talking about, and if you're German speaking, it's Semmelknödel. So
I would not have been able to pronounce that.
All right. Okay. Now we have a lot to talk about, so we need to jump in. But what is the weirdest thing that we do here in Germany? What did you notice?
Well, it's a great hotel that we're at, and it's perfect for the group and trading. We have a really nice room, but in our bathroom, we had just a sheer curtain and this huge window that anybody could look in. So I thought there might be some weird, or just it was socially acceptable to wave at your neighbor from the bathroom, and you debunked that for me.
We're all just very comfortable in our own skin. No, it's unusual. So mine, it's frosted.
Yeah, I found out that they are doing a little renovation, and so I think that they're yet to put the curtains up. So anyway, that was a little bit weird, debunked, and now we're good.
Good, perfect. By the way, if you're seeing us again right behind us, so this is where we are here with our masterminds, and we're showing behind the scenes. So on the big screen, on the projector, they are seeing what you do not see. It is behind the scenes, what we're usually seeing here on our other monitor. So this is why it's a little bit weird of seeing us here.
Double.
One more time. Okay. All right. Let's jump over and let's take a look at the markets. And I mean, when we do, the daily chart doesn't really tell the story. So here I have the S&P up. And yesterday down 0.8%. Let's actually go to the Nasdaq. Yesterday down 2.3%, but when we look at a 5-minute chart, we see that it was ugly throughout the day. In the morning, we opened up and we were just sliding.
Yeah, I mean, that was a big sell-off in the morning, and like you said, on the daily chart, there isn't a big difference between the open and the close, but looking at the actual day, at one point, we were down as much as 3.8%, so a pretty big slide coming up off of those lows, but a choppy or a wild day, a volatile day yesterday.
Yeah, so let's talk about why that is. So right now, there's mainly 3 reasons that are making these markets super, super nervous and that are actually moving the market lower. And number one, it is all about earnings. I mean, because we are waiting for the FOMC meeting minutes. That's happening today, so we'll talk about this in a moment. But yesterday, earnings were in focus. And there was this social media company, not really that big, Snapchat, that basically said, oh, you know what? Advertisers are cutting back. And so Snapchat yesterday, let's go over here. Let's take a look at this. I mean, down for the day, almost 43%. I want to say it was less, but 40%. And this was actually dragging down some other major tech stocks.
Yeah, and I mean, here's where you have earnings, which traders are always focused on. But in this earnings environment, I think that traders are really trying to get a feel for what companies are saying could affect earnings in the future to see if that's a precursor for things to come with other companies. And Snap said that it expects its Q2 revenue to be below its prior guidance because of the macroeconomic environment and that deteriorating further and faster than anticipated. So I think that, not only do you have that impacting that sector or like companies, but just in general, you have traders wondering, okay, is this something we're going to start to hear from other companies as well?
Well, because we have this talks about recession, right? And there's now the question, okay, are we sliding into a recession? Is the Fed overdoing it, the so-called soft landing that Powell was hoping for, where he recently last week said, well, it might be a bumpy landing. And right now it seems that it could not be a soft landing at all because it starts to look bad. And this were also, we had Best Buy reporting yesterday. And Best Buy, even though they reported better than expected earnings, actually it says it was slightly worse. But anyhow, they provided some guidance where they say, we will feel the effects of inflation and also less consumer spending.
Yeah, and I mean, they finished a little bit higher, so much better than Snap. But again, worsening macro conditions is the phrase of the day.
Right, and then we have Abercrombie and Fitch, so another retailer. Since now, towards the end of earnings season, we have just a bunch of retailers reporting, and Abercrombie and Fitch reported earnings, and they also issued some warning, and that's what we're looking for. I mean, going into the next quarter, going into the second half of the year, what are companies expecting? And this is where Abercrombie and Fitch said, well, doesn't look too good.
Yeah, I mean, they said that the disappointing guidance was due to higher costs and lower sales due to an assumed inflationary impact on the consumer. So they're blaming inflation.
Right. So this brings us to the second point. So, I mean, first of all, we have all of these earnings. We'll take a look at some more earnings that happened here yesterday after the bell and this morning before the bell. But let's talk about the economic reports. I mean, we have the big one coming in today, which is the FOMC meeting minutes. And but we had quite a few reports yesterday. We had the flash manufacturing PMI coming in worse than expected. We had the Richmond Manufacturing Index coming in worse than expected. And new home sales coming in much worse than expected.
Yeah, a miss there, and it also looked like there were concerns globally with the global economic picture as well, with some worse than expected readings out of Japan and the Eurozone.
Right. So this morning, then we had the core durable goods also coming worse than expected. So when we see red, it's just showing us the economy is slowing down. I mean, yes, on the one hand, this is what was expected as the Fed is raising interest rates here. But now the question is, how quickly does it slow down? And this is where the Fed has this, this balance between, okay, on the one hand, they need to get inflation under control. On the other hand, they cannot completely pummel the economy and really driving it into a recession or worse.
Yeah, and there's also the question of just how much of this worry is already priced into the market. Right now, there's still some downside, it looks like.
Right. And then finally, we also have concerns out of China. I mean, China is still battling COVID cases, and so they are locking down. And this is where we had some major banks cutting their outlook for the Chinese GDP.
Yep, that's just one more layer to this worry that's creating the volatility in the market.
All right. Well, interestingly enough, but this is where you think, okay, with all the interest rates talk, that interest rates would go higher, but actually they are moving lower. Look at this, from a high of 3.2%, now down to 2.74% this morning, moving lower again. So that is super interesting that we see the market sliding and interest sliding.
Yeah, and we've seen a little bit of a disconnect here recently. And in general, if you look at just normal market conditions, it's not this perfect inverse relationship. But you're right. Recently, we've seen things moving together, which we haven't seen. But in general, this should be a good thing if the markets should stabilize, if the 10-year yield's coming back down.
All right. So today, the big one will be the FOMC meeting minutes, and they are being released
11
at
p.m.
11 our time
in Germany.
Right. So this will be at 2 p.m. Eastern time. Now, what can we expect here?
We're just going to have to see, but I think traders are going to be looking over those minutes with a fine-tuned comb, and the reaction is anybody's guess.
Right. Because this is where we can have both possible reactions. On the one hand, this where market participants could see that, okay, the Fed gets really, really aggressive in raising interest rates, and this could be perceived as positive, where they say, okay, this might mean that we are getting inflation under control. Or on the other hand, traders can say, oh no, they're raising interest rates and they will pummel the economy.
Yep.
So this where it really is not about the report, it is about the reaction of traders to the report.
Absolutely.
And right now, everybody is already expecting that the Fed will raise interest rates for the next 2 meetings by 0.5 percentage point, and then they will start slowing down. But right now, I mean, what we are seeing here from the economy, it could actually be that the Fed might raise interest rates only one more time by 0.5 percentage point, and then maybe they go back to 0.25 percentage point. And this is what market participants want to know today by looking at the meeting minutes.
Yep. What does the Fed have planned? And we will see.
All right. So we had a few more earnings reports here before we take a look at the positions that we took yesterday. So we had, for example, Nordstrom, and this was super interesting. Nordstrom actually said, you know what? We're doing good here. So shares at first jumped earlier this morning, 7%. Right now only up 2.5%, but they gave a great outlook.
Yeah, I mean, like you said, down a little bit from where it was pre-market, but traders liking that the retailer announced better than expected earnings, also raising its full year outlook. The CEO said the company has experienced a surge in demand, surprisingly, from shoppers refreshing their closets for long-awaited occasions.
Yeah, but it seems that Nordstrom is there pretty much alone, because Dick's Sporting Goods, another retailer, I mean, they reported better than expected earnings, but they are down 12% because their outlook is way different than the one from Nordstrom.
Yeah, they had a weaker than expected outlook for the full year as it adjusts for what it calls challenging macroeconomic conditions. Again, the macroeconomic buzzword of the week. They reported better than expected profit and revenue for its last quarter, and comparable store sales that actually fell less than expected, but it's that outlook that has traders a little worried.
All right, 2 more. Express, another retailer, up 11%. So here, again, a mixed bag, right? So they have a different outlook going forward into the next quarter.
Yep, bipolar earnings for the retailers right now. They reported a loss that was adjusted to 10 cents per share, which was less than the 15-cent loss that was expected. Revenue was better than expected. They raised its full-year outlook for comparable store sales, and so they're doing well pre-market.
Yeah. One interesting thing I want to bring up is Toll Brothers. I mean, they're home builders, and I mean, they are up actually more than 3%, which is surprising because yesterday we heard that, I mean, new home sales are plummeting. I mean, people are no surprise. I mean, we have a higher interest rate, so a higher borrowing cost, but yet they said, no problem, right?
Yeah, I mean, they did better than expected. They said, while demand was still solid, it has moderated because of higher mortgage rates. So I think the traders were kind of expecting worse, and they're saying, we're hanging in there.
All right. So let's take a look at the trade that we did yesterday. I mean, we've been talking about our positions. Was it already yesterday? So we'll resume talking about our positions here tomorrow. But here is the one new trade that you took because I'm actually pretty full, but you took the Visa trade here.
Yeah, Visa and MasterCard actually popped up, both looking good. Here, I really like the chart for the wheel, just kind of finding these nice ranges, strong support there. And I decided to sell the 192.50 put for this Friday. This gave me 40% annualized based on the premium collected.
Right, and right now, I mean, Visa is trading at 202, so a solid $10 above.
Yep.
I mean, let's see what happens. Today, I think in the morning, the markets will be rather muted, the reaction, maybe nervous, going a little bit down, and then really at 2 p.m. Eastern time, this is when I think the fireworks will start.
And I don't think it's actually 11 p.m. Martin. What is it? What's the difference?
It's 6 hours, so it will be 8 p.m.
Okay, I was just
8 p.m. We will just have finished dinner. We'll be on our second beer.
There we go.
Okay.
So 2 beers later.
Anyhow, so as you can see, there's still opportunities to trade these markets if you know how to do this. And it's not all doom and gloom. Eventually, the markets will come back. The question is, how much further do they fall? And this is what we're going to talk about tomorrow in our stock market update. We'll do a more in-depth analysis of how much further could these markets fall before we see an end to this. Anyhow, hey, we have a bunch of people here in the room. We need to get ready for trading.
Yep. Let's do it.
All right. Have a great rest of your morning, afternoon, evening, wherever in the world you are, and we'll see you again tomorrow.
Happy trading, everybody.
There's the finish button.